So now we'll go over the next set of homework. This will be exercises 3:11 and 12. And exercise 3:11, you're given the adjusted trial balance and told to come up with financial statements in good format. And so at this time, you should be able to do this. There weren't any particular problems with any of this with the on-campus students. So you have to know exactly what goes on your income statement and put it in fairly decent format. Your retained earnings statement. You have to find your beginning retained earnings over on the adjusted trial balance. Add your net income less your dividends and get your ending. And then prepare your, and they're usually going to be classified balance sheets, which means you've got your current assets, your total current assets, and then your long-term assets shown separately. So if you have any questions on preparing the financial statements from the trial balance, just let me know. Okay, you also had 12, exercise 3:12. This was really just sort of more practice on that. This one did not have any dividends to deal with. Oh, but then it asks all these embarrassing questions about if the note had been outstanding for 6 months, what's the interest rate? So you have to go back up to both the adjusted trial balance, back to the adjusted trial balance. You see your note payable amount, the face value $5,000. You get interest expense of $150, but $150 is half the year's interest. So $300 is the annual interest. So you divide the $300 by the $5,000 face value, 6%. This one, oh my goodness, was this one ever annoying? This one really bothered everybody a lot. The only way that I can do these is with the T accounts. It makes it a lot easier than doing it the way Wiley does it. So if you're going to do a T account on this, oh, 312. All right, I have to get the right problem here. You have to sort of ferret the information out of the problem to do this. And so if you do a T account, this is the basic calculation, but if you do a T account, you would have your salary and wages payable, right? And so you take out the information. You know that it ended up at $1,300. Right, so that's your goal, is to get there. You know that there was salaries paid of $17,500. So you assume that they were salaries expense, salaries payable. So when they were paid, you would be debiting your salaries payable for that amount. The 11,300 is the salary expense for the year. So 11,300 would have been salary expense, salaries payable. And so now they're asking you for the beginning balance. You just have to figure out what number goes there to end up here. So it would be this plus this minus that gives you that. And it comes out to $7,500. I'll be quite honest, I just have to plug numbers in there to see what's close, and then I work my way to it. My brain doesn't work like that. It doesn't work like that either. But I think the T accounts do help in figuring out some of these problems. Okay, so that's that one. And yeah, so I think that was the main problem with that problem. And then it's just a matter of doing your balance sheet. Okay, so that was 12. Oh, you also had a couple of problems. Okay, and to get to those, let me just, you had problems 1 and 3, so here's problems 3-1. No, I guess it would be helpful if I got this out of here. There we go. Okay, and I'm assuming that you can see these. If not, you can look at them on the Blackboard site. So for problem 3.1, they give you the transactions. You're supposed to post them to the ledger and then prepare the trial balance. That should be really good review. And then close the ledger and prepare the statements and then close the ledger and do the post-closing. So this is just practice on going through the accounting process. So you have your trial balance, you prepare your income statement based on that. And this, again, is a dentist, a DDS, so he's a proprietor here. So owner's capital, September 1, withdrawal by owner of the $3,000, that would be the equivalent of a dividend, and then owner's capital at the end, okay? And when you come to the balance sheet, you're listing owner's capital of the 23,007. Okay, closing entries. There's usually a 4-step process with a corporation, but here we've got service revenue to the income summary, and then all your expenses get closed. And so with your post-closing trial balance, you know that it's only the permanent real accounts, balance sheet accounts that are remaining. All of your expenses, your revenues have been closed. Okay, so that was problem 3.1. And then you also had problem 3.3, so let's take a quick look at that. Okay, oh, this one was terrible. Everybody hated this problem. There's all different ways that you can approach this. The way I tend to do it is very mechanically. So when I have a problem like this, I say, okay, let's just sort it out and see, what it looks like. So the salary, you've got 8 employees. Friday's the payday. You get 5 employees that get $700 a week, 3 that get $600. December 31st is a Tuesday. They don't work on the weekends, and they all work the last 2 days of December. Okay, so I start right off here. We want to come up with the adjusting entry for Monday and Tuesday. So you've got 5 employees that get $700 a week. So that'd be $3,500 a week for those 5 employees, which comes out to $700 a day. 3 employees get $600 a week. So 3 times 6, 1,800 divided by 5 gives you $360 a day for those guys. So your total payroll for Monday and Tuesday is 1,060, and for the rest of the days. And so when you double that, you get the 2120, and that's your journal entry of salary and wage expense, salary and wages payable. You do not have to do it this way. A lot of students are quite comfortable doing it the way Wiley does, where they're just multiplying it out. But here, you can see what you've done, and you can sort of get a concrete picture of it. Unearned rent revenue. And again, I take a fairly mechanical approach to this. They give you all of this, they give you this information here. I just sort of sort it into what we need to know. We're trying to figure out the amount of rent revenue to recognize at December 31st. So for the first group, we've got 6,000 monthly rent. The security deposit is totally irrelevant to the rest of the problem. And so you've got 5 leases at that, and it's only November, December, 2 months. So that's 30,000 times 2 gives you 60,000. And then you do the same thing for the other one, and you end up with your journal entry. Okay. Prepaid advertising, and I set it up the same way. You have your, you're just trying to figure out the advertising expense, how much have you used this year. So you've got one contract, $500 a month. That was taken out in May, so that's 8 months. So 5 times 8, 4,000. The other one, $300 a month. It's been around since October, so that's 3 months. And so there's your journal entry. Okay, note payable. Yeah, that one's not bad. Okay, so that was the homework that went along with that group of material. Okay.